G'day everyone, welcome back to Pete's Investing. Today is June the 5th, 2023. This is the US S&P 500 update. On the weekly, we're in a bullish momentum. On the daily, likewise bullish. And on the hourly, we've broken down into a neutral, so be cautious about going long. Let me go through each of these. So on the weekly, first off, our moving averages of the price chart and the moving average of the CCI 150 are both aligned, showing a bullish momentum. However, on the daily, we've got this key resistance up here at 42.34 currently, and that's been breached, and it's now hitting this minor resistance that's still forming. And for that to confirm in a coming day, or hours I should say, that's at 42.90. So if it bounces below that, then that's probably going to confirm, and I'll remove that hard red line and make that the major resistance. Otherwise, if it breaks through that, then that's no longer valid either, and we'll have pretty much open skies for the S&P. We did initially have this bearish divergence on the CCI, and we always track that against the highs, but you'll see there it's made a new high in the CCI there, so that's probably failed, I'd say. So the way this divergence works is when we get a bearish divergence like it was back here and a bullish divergence on the price chart, then we expect it to pull back and break below the next Fibonacci level. It had a minor pullback, but not far enough to break and breach below that lower channel. So it's actually broken above that area. So in terms of, so I'm going to remove first of all this Fibonacci, and I'm going to extend this divergence to that high there. So that's still going up, but also this one here, that looks like it's also rising now. So that's no longer valid. So I'm going to keep it in there for the moment in case this is a false break and it keeps drawing down from here. So that might just be one little false break, in which case this descending CCI will continue. But again, that's just an assumption. I'll see how it goes in the coming days, whether the price pulls back from there. So if it does, then we'll worry about a target once that happens. But at the moment, I'll leave the Fibonacci out. But that will be somewhere in this area if it does breach and break below this channel. On the hourly chart, again, if I zoom out, I've got a long program backtest and also a short backtest here. And again, you'll notice there's a couple of average downs. We don't use stop losses. So here, for example, during the long backtest, when the price was declining, the price was averaging down, and another one there. And likewise here, when the price was going up, the short backtest was averaging down. Now, to avoid those average downs, as I always say, I'd like to trade when the weekly and the daily and the hourly are aligned. And as per the indicator down here, you can see there during this period when the price is declining, during around April 22, the price is declining, there are no long positions on the weekly. So again, only trade in direction when these indicators align on the weekly and daily and the hourly. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to us on the Patreon page. We also do weekly scans of stocks, currencies and commodities and answer any Patreon member questions. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.